Hi, it's Robert Young. It's Friday. It's the last day of the first week of September. And I sent out the newsletter last month. I said I was going to kind of cover comprehensive 3 months and only reach out to you if there's any kind of reason for a change in our strategy or tactics or anything happening in the market that I felt needed to be addressed. And I just thought I would just send a quick couple of minute note out this week because of the volatility and just reiterate our strategy, our tactic, and if there has been any changes to that. So here we are. So over the weekend, over Labor Day weekend, Trump initiated another 5% tariff. That caused the markets to open up down about 1.5% on Tuesday, first trading day of September. And then, of course, the bounce back. And then yesterday there was news that China and the Trump trade team are going to be meeting in October, scheduled a date, and algorithms that are reading news stories just went crazy and started buying up stuff on the news that, hey, there's going to be a progression in trade talks. Well, come on. What's changed, man? Nothing, right? Same issues, intellectual property theft, having to turn over proprietary information if you want to work in China. Those are issues that are still insurmountable at this point. And frankly, could they come off the closer we get to an election time and the more desperate a trade agreement needs to be met in order to push the administration into a second term? I think very possibly. Those become not as important issues as they have been over the last couple of years. But regardless, until then, the problem is still there, the challenges are still there, and the ability to reach an agreement, I believe, is just as possible today as it was 18 months ago. Just remember June of this year. Markets were down about 2%. Steve Mnuchin steps out and said, hey, guys, we got like a 9% deal hammered out with China. And in fact, that wasn't accurate at all. Or most recently, over a couple weekends ago, Trump says, hey, I've been getting calls from China saying, let's get together and let's chat about this whole trade thing. And it turns out that was actually uncovered as an outright lie. So the point is, markets go down, and then we see a tweet or news about a trade agreement. But in fact, it's a meeting, the same type of meeting that we've had dozens over the last couple of years that have resulted in as far as an agreement. So algorithms buy and people get elated when in fact, if you really look at the underlying structure of the market, there are some very serious concerns about areas that were not bought, and these are very indicative of the health of the economy. Now, we've been tracking, as you know, we have our little tracking system. We track copper, oil, we track unemployment numbers, we track the number of hours worked, we track building permits, commercial buildings, not housings. We look at vehicles sold, we look at mileage, we look at yield curves, we look at the Fed fund rate, and if it's inverted to Treasury bonds, not the 3 and 10 or 2 and 10. We look at the Fed fund rate because that has been a more solid precursor to a recession. And we are seeing some contraction areas. Remember, there are two parts of the economy. Right? There's a service economy, retail, going out to restaurants, etc. And then there is the manufacturing economy, right? Taking raw goods and taking raw material and producing something. And what we have seen over the last several months is a steady decline in the manufacturing sector. Now, granted, it's not as significant an income producer for this country as the service sector, but no less unimportant. And it's very important to realize that we're not the only country that manufacturing is starting to shrink, and we're seeing it in the Asian Pacific Rim or Eurozone. And so we're seeing contraction. That's undeniable. Those are facts. But here's what we are seeing. We're seeing our markets going up, and we have to ask why. Well, part of the reason why is money is so cheap. Frankly, uh, corporations are out there going nuts, borrowing cheap money. Matter of fact, lending rates from banks have actually loosened significantly, even more so than prior to 2007, 2008. Uh, Lending rates have, for not only large corporations, but even small corporations, have really loosened. And so large corporations are taking advantage of that and buying up as much stock as you can. And let's look at it in terms of what does that mean in value. If you have 5 Ferraris out there, each Ferrari is worth, let's say they're $10 million each. I don't know what a Ferrari cost. So, but two guys go on a track and they crash their Ferraris. Now there are really technically 3 Ferraris left. What do you think happens to the value of those remaining 3 Ferraris? Are they the same as before? Are they less? Or are they more? Right? They're more. Same with stock. You take more, lose stock off the table. You have only a certain amount left. What happens to the value of that stock? It goes up. So we're seeing that. We're seeing these buybacks, and that's what they're called. We're seeing these buybacks in the marketplace, and they're driving the price of stocks up. Not revenue, not earnings, just simple supply and demand. So what is changing with our strategy? Nothing. I'm still staying very defensive. We're in utilities. We are in healthcare. We're in cash. I did add some positions to certain accounts, expanding some of our oil positions in Marathon Petroleum. We are already exposed in oil with Fortress, and we're seeing those prices escalate as the price of a barrel of oil goes up, and that goes up naturally through about the beginning of October, and then we'll see the price of oil dips down again and then kind of rises back up. But those are solid companies paying great dividends, and so we're staying in them for a long-term investment, but we're also taking advantage of seeing the growth recently with the price of a barrel of oil. But that's it. Nothing's really changed. Don't think that the news means that anything is any different or the tweets are any different until something happens in October, until there's an announcement, until they're sitting at a table with a pen signing. It's all noise. If you need anything, reach out anytime. Email, text, call. I'll keep you informed if there are any changes, and thank you so much. And let's just stay the course. Talk to you soon.